The newsmakers of the day clearly have to be one, Mark Zuckerberg and WhatsApp Pay getting permission in India for the rollout. And the second newsmaker has to be the NPCI, which has come out with guidelines for all third-party apps, saying they cannot have more than a 30% market share coming into effect from January 2021, but existing TPA third-party apps will get 2 years' time to roll this out. So basically, is the NPCI capping an app's market share at 30%? The 30%, incidentally, is going to be calculated on the basis of 3 preceding months. How is an app supposed to know that they're nearing 30%? Is there going to be a live scoreboard? Why is the NPCI interested in capping market share? Should that not be up to the consumer? And once you reach the cap, then what? Does the app then for the rest of the month can't do business? We still don't have the SOPs, the standing operating procedures, but it's what anybody on Startup Street is talking about. And I'm going to be discussing that and more with my next guest. Joining me on the show, the co-founder of Bharat Pay, Ashneer Grover, as well as Deepak Abbott. He understands fintech really, really well, writes a lot about it as well. Hi guys, welcome to Startup Central. Thanks a lot for joining us here. Ashneer, I'm going to come to you first. You have a first mover advantage when it really comes to the kiranas, the small and medium enterprises, and what you have done at Bharat Pay. How do you react to the fact that a giant, a monster like WhatsApp is going to be entering the market? And you know, a lot of your target audience use WhatsApp. And if it's going to be completely seamless for them, how real is the fear that they're going to switch?
Yeah, so I think WhatsApp coming into India, at least from our perspective, is a very welcome move, right? Because you have to understand what it does. You have WhatsApp in 400 million phones, right? UPI today would be at 100 million or thereabout, right? So you're talking about an app which is 4 times the base of UPI overall combined itself, right? Now, if that is a fact, then and it is the most trusted app as well. So, you know, if I ask you delete all the apps, leave one, 99 out of 100 people would, you know, keep the WhatsApp app. So when you have such a powerful app already in the phone and UPI can ride on it, you're going to get new set of customers coming in, right? And these are set of customers not only in the cities, but in the tier 2, tier 3 towns, villages. So WhatsApp actually has the potential of taking UPI much wider than all the other apps combined. So in a way, it is a great welcome move because it will grow UPI to the next level. And as UPI grows, we as Bharat Pay are on the merchant side. So we are, you know, always accepting transactions. So the more the players there are, and the more they're fiercely competing to drive transactions, we are the beneficiary on the other side. So it's a very, very welcome move from our perspective.
So you are talking about how WhatsApp Pay is actually going to grow the market, and it's fantastic news that's coming in for the merchants. Deepak, the merchants might be happy, but that certainly can't be the case for the third-party wallet, the third-party apps.
Yeah, actually only 2 apps, Phone Pay and Google Pay, who have considerable share today, 40% each. I think they're going to get impacted, but I reckon that in 2 years' time, they have still 2 years to comply to that. They will be at a stage where, you know, all 3 will be happy with maybe 33% each, right? And WhatsApp, while will have, the biggest issues implementing checks from day one, because for them, the rules apply from Jan 2021. So I think Phone Pay, Google Pay will find ways to build such checks in the system where they don't hamper the user experience. And the way both of them are growing, so we'll have to understand, the difference between, what user can do on WhatsApp versus, why they use Google Pay or Phone Pay today. It's not just P2P or P2M scanning a merchant QR. They create an ecosystem. You can do a mobile recharge, bill pay your insurance, play games, pay your electricity bill, credit. So there are a lot of things that you do with these apps. A lot of people have integrated these apps with third-party apps. For example, I have Google Pay linked with Zomato and Swiggy and a couple of other apps. So I'm into their ecosystem right now. So I have no complaints with the user experience that I get there. Now that's as an average user. Now tomorrow when WhatsApp comes in, they are technically replicating a pure P2P experience. While, I understand that P2P on WhatsApp will be much easier and much more seamless than, what it feels on PhonePe and Google Pay. Having said that, Google Pay will have, WhatsApp will have those 30% restrictions. So that leaves enough market for PhonePe and Google Pay. And you have to understand the way UPI is growing. We are already at 2 billion transactions. And in 2 years' time, if you're looking at least doubling, if not more, 4 billion transactions, if each one of them are processing more than billion transactions a month, that's still a huge number, right? So I think all have their own space, at least for next 2 years. While I find this move totally illogical, but it'll not have any on-ground impact. It'll definitely going to impact user experience on the WhatsApp side. So that's my take. I think illogical move, but eventually won't have much on-ground impact on the overall positioning of all the TPS.
Deepak, maybe the 30% rule has also come because of WhatsApp Pay going live. We'll never know that. I don't know if the NPCI will ever say that. It's just an educated guess that I'm making because you saw both the announcements coming on the same day. I'll get to that in just a bit. But if I could go back to you, Ashri, on a very important point that you made there, that how WhatsApp Pay is going to grow the market, especially in the villages, rural parts, smaller cities and all of that. Will that then mean that startups, companies, merchants and all of them will rework their business model around WhatsApp Pay to try and piggyback on it, grow on it, and therefore would that also mean then that Google Pay, PhonePe or even a Paytm will have to up their game and we're going to see a shake-up?
Yeah, I think the shake-up has been avoided, right? Like the cat would have been left among the mice if NPCI would have given an approval and said no capping, right? That would have been the real shake-up. Now it is like keeping both the guys happy. One camp saying, oh, here's, you've been waiting for 3 years, here's a Diwali gift. And to the other guys saying, you're not going to be 10% market share tomorrow, but you've got 2 years to figure out, and be happy that the other guy is not going to grow beyond 30. So the balance 70 is between the 2-3 of you to split. So I think NPCI, what they have done is in some sense rational. We're saying, let's keep both the camps happy. And we are growing in any case, right? So that seems to be their view. I think on expectations from WhatsApp, let's be realistic, right? It's a global app. There's no WhatsApp for India. There's not a separate app called WhatsApp for India, right? It's a global app. Anything that they build has to be from a global lens and has to be applicable globally. So while payments and P2P payments, as Deepak rightly pointed out, is going to be the first product, don't expect the second product in a hurry, right? Or don't expect, everyone to realign their business model just because WhatsApp Pay has started. I think what it will do over the next 2 years is, let's say, folks like my mom and dad who would not specifically download a separate app to make payments, just discover UPI as an additional thing or a feature, similar to sending a picture or a location, they might start sending money as well, right? So that's my realistic expectation from WhatsApp. I don't think it's going to shake things up from next month onwards. It's going to take its own time.
Oh, of course, and you've got 2 years to comply, right? We don't even know the standard operating procedures as yet, but of course reactions have been coming in. We've not heard from PhonePe. We have heard from Google Pay. Like Deepak just pointed out, both Google Pay and PhonePe have about a 40% market share each. Let me just read out the Google Pay statement. Digital payments in India is still in its infancy, and any interventions at this point should be made with a view to accelerate consumer choice and innovation. A choice-based and open model is key to drive this momentum. This announcement has come as a surprise and has implications for hundreds of millions of users who use UPI for their daily payments and could impact the further adoption of UPI and the end of financial inclusion. The question I also want to ask is, how will this 30% be calculated? How will an app know it's about to breach the 30%? Well, then that means the banks will have to cut it off. How is it going to work? Will there be a live scoreboard? And shouldn't the consumer decide who they want to go to? That and more coming up after this short commercial break. Stay tuned, and both Ashneer and Deepak will stay with us. Welcome back. You're watching Startup Central with me, Nantara Rai. Ladies and gentlemen, stay in touch with us. We love hearing from you. Our email address, suc@etnow.tv. We're continuing with the big discussion, the future of digital payments. Remember, the NPCI came out with two very big announcements. One, WhatsApp Pay goes live. Secondly, third-party apps market share has been capped at 30%, comes into effect from January of next year. But there's a 2-year window for compliance. I've got two guests with me today, Ashneer Grover as well as Deepak Abbott. Deepak, let me come to you now. Some of the questions I want to understand, and before the commercial break, Ashneer was making this entire point about how the market share cap takes care of the problem that there will be no shake-up because of WhatsApp Pay, which will grow the market. But my question is, how is this 30% cap going to be monitored? Let's say an X app is about to breach it. Who's going to monitor it? Is it going to be self-regulation? How are the banks supposed to know that, okay, now these transactions are not supposed to go through? Is there going to be a live scoreboard? How is a user also supposed to know that, okay, this app that I like to use, I'm not going to be able to use it come tomorrow, day after, because this cap is going to be breached?
So there are two parts to the answer. So first part, I think TPS will have to implement that. I don't think so banks have to do anything because, the transaction originates from TPA and the cap is on them. Cap is not on banks. So as a TPA, if someone is at a user level or maybe at a daily level trying to, cross the average transaction, which takes me to more than 30%, which I don't know how will they calculate on a real-time basis. I think they'll have a broad estimation. They'll have to restrict the number of transactions. Like, for example, even today, when ICICI Bank restricts the amount you can transact on TPA versus their own app, so TPA shows that message that your bank is not allowing that transaction. So they'll have to find a way to, implement those checks and present a message to the user. But I think my bigger issue is that NPCI is trying to solve a wrong problem. I don't think so issue of capping at 30% makes any difference to the main issue that we have. That is the bank's infra, which is already we see that, there's almost 7 to 8% technical decline happening, almost 10 to 12% business decline happening. Now that is because of, I think, the load on UPI. So banks have to improve their infra irrespective, right? So now, even if you see last time when, Yes Bank moratorium happened and PhonePe was not able to, let their user transact, that was bank's issue, not TPA issue. Now TPAs can quickly switch to another bank. They can have multiple switch. In fact, all TPAs are now required to do multi-bank model. So I don't think so tech-wise TPAs have any issues, right? So they can handle as much load as it comes to them. Banks, especially SBI, HDFC, which are almost catering to 70% of the UPI traffic, they are facing challenge. So there's no restriction on them, right? So tomorrow, if let's say SBI becomes 80% and they start getting almost 2 to 3 billion transactions a month, their infra will start crumbling. Right now, also they are almost every week they're taking a downtime on UPI. NPCI has to talk to them, get everyone on board, and see how can they scale that infra. While I understand, they have their own pressures on P&L, there's no business model around it. So they're not willing to put money behind, scaling that infra, but it is impacting user experience, right? Now, the transaction failures are impacting user experience. Now the front end, checks that TPS will have impact user experience. So end of the day, it's the user who's going to get suffer from this.
Come in there, Ashneer. You, for example, have been making a case like your parents might now be using it simply because they're familiar with WhatsApp, they're understanding a third-party app. Deepak here is talking about how the user experience has been suffering, how you've been anyway seeing technical declines and all of that. Now you've got a monster like WhatsApp Pay that's also coming. You're going to add extra regulation of the 30% market share. How do you see all of this panning out?
I think, the maths is very well done there, right? As you rightly pointed out, there are no coincidences in business, right? So it's not like two things came out and were independent of each other. Now let's pick up the 30% cap number. And on the other side, what they have capped WhatsApp at is 20 million users. Now, if you have 100 million users and you are allowing WhatsApp to take 20 million, you're technically allowing them to go up to 20% at a user level. Now, even if a WhatsApp user transacts 50% higher than a non-WhatsApp user on UPI, the 30% cap on WhatsApp will be met. The other guys will get diluted down, right? So, whoever is at 40%, because of WhatsApp taking 30% market share, they will come down to, in any case, they're 30% or thereabout. So the maths is very well done at a portfolio level out there. I think in terms of specifics on how it's going to be implemented, I don't think even NPCI would have done that much homework now. I think they've clearly put a smart clause saying we have 2 years for the existing TPAs, and that gives them 2 years to figure out how to solve the 30% problem there. The immediate problem they've solved is WhatsApp will not go beyond 30%, right? And I think that's they've smartly done by limiting the users on WhatsApp.
But shouldn't it be up to the user to also decide? You're talking about fairness, you're making sure that the ecosystem, in their own words, stays safe and protected, but it should be up to the user what app they want to go on, and that's a totally different debate. But Deepak, what happens when you're going to have a rival organization to the NPCI come up? I don't know if it's going to happen or not. We've been hearing about it for a while, that XYZ are going to get together and come out with an alternative to the NPCI. That is also going to be quasi-government. It is also going to have the RBI's blessings. This is a new age concept. This is where you need to actually have just the right amount of governance and not too much governance. What about that? When you have another organization coming up, that'll have its own rules.
I think the new NUE that we're talking about, whenever that comes, I think they'll build newer products. The existing products, they might get split between two entities, but UPI will still remain like one product, which I don't think so. Any new entity or the NUI which RBI is proposing is going to create a competitor to UPI. I think they're going to create competitor to NPCI, because NPCI today runs multiple payment products from CTS to IMPS to RuPay to UPI. So either they're going to split the NPI products, or they're going to let NUI create new products. So that problem is still not solved. I think the competition in future, we'll see a lot more innovations happening on the payment space. But I think this whole issue of UPI, if it stays with NPCI, it goes to a new entity, will still be the same, that, we need to, you need to provide good experience. We need to, figure out how to let, innovative products come out without any restrictions. But like I said earlier, that, while those restrictions are on paper, in practical, in real sense, for next 2 years, we're not going to see any impact. Unless after 2 years, there's some new rule change, the new entity, let's say they take over UPI and they feel that, by putting these restrictions, they're not able to expand the universe. They are still playing among those 150, 160 million users, while India has 500 million internet users. So maybe, 2 years, things can change. Who knows? These are not rules which are set in stone. So hopefully, it's an evolving ecosystem. We'll see how it evolves, once, we start seeing some traction from WhatsApp.
Because, you've given all the talk of Atmanirbhar Bharat and all of that, the fact is that right now, this space is going to be occupied with the American giants, right? Google, Walmart-backed PhonePe, and now you're going to have WhatsApp Pay. So, Ashneer, if I could now come to you and ask you this one question, that, okay, you kind of kicked the can and said we'll deal with it in 2 years from now. And, by then, I guess they'll have conversations with the stakeholders and all of that. But this entire philosophy of 30% cap, which you're saying is going to be on the basis of 3 months. Now, every month also, you have seen pretty decent growth, right, in the UPI transactions and volumes. So is it fair also to tell an app that, nahi, पिछले 3 महीने के basis में, this is what you're allowed?
No, I think, see, even on UPI, you have to understand, there is I would say non-ignorable fluff, right, which can always be cleaned out. So, if you know that 1 rupee transactions are what, they're test transactions, or they're just, someone trying to game the system, and you say, we are not going to allow 1 rupee transaction, that can help load balance, right? So if you want to do load balancing, I think there are very, very innovative ways of doing it, and very low hanging fruits as well, which will also improve the quality of overall transactions on UPI, right? So I don't think that is anyone's concern. I think what you are pointing out rightly is, let's say I'm the 20 million plus one customer and I can't get on WhatsApp Pay at all because now it's been capped at 20 million, right? I think that is rightly a denial of right to use a service, right, which the other guys are enjoying. And I think NPCI will have to answer for it when it comes to it. End of the day, the holistic thing is, if the customer wants WhatsApp Pay, they're going to get it one way or the other, right? Either NPCI would have to bend backwards, or a NUE would have to come in, and WhatsApp will run half its business on UPI and half on the new NUE. I think they're here to service the customer, and customer is the king, right? So you, me, NPCI, and WhatsApp cannot, stand in front of the customer.
Okay. Both of you have said there are other innovative ways of doing it. Deepak, in fact, has gone on to say this is illogical. So I'll tell you what, Deepak, as someone who's been involved in the ecosystem, who's trying to also build a startup, in the digital world, tell me what should have been done? What would your suggestion have been?
I think Ashneer made a very interesting point. I think that needs to be elaborated a bit. He spoke about those 1 rupee incentivized transactions. There are millions of incentivized transactions that are happening that's not benefiting anyone, except it's just increasing the number of transactions and making some TPS look good. I think with these restrictions, they may relook at the user behavior that they have on their app. Maybe users are doing that to either gain scratch cards or to earn referrals, or to just make benefit on some cashback offers that these are running. So I have a feeling that all this will get cleaned up. We'll see a lot more organic transactions coming in, because even today, if 100 million users are doing 2 billion transactions, that looks a little odd. That is not a normal behavior for payments for most of us, right? So who are these people who are doing 20, 30 transactions a month? So some of these transactions, once we have better checks in terms of you can't do more than one test transaction of 1 rupee a day, right? There's no need for someone to do multiple 1 rupee transactions a day, or for that matter in a month to a same number. So once you have those checks, once you build a better merchant network where you try and encourage users to do meaningful transactions, I think we'll have much better growth of UPI, much robust growth of UPI, and we'll see lot real numbers. I'm not saying the numbers that are here right now are not real, but some of those numbers are pushed by these CPAs because they have their internal targets to grow month on month. And that is something which they may have to relook, and that also may save some cash for them because they are incentivizing these transactions.
Yeah. Now you know what UPI did for payments, Ashneer. We've been talking about this the last couple of months. We're going to perhaps see the UPI moment for lending, right? Which is going to be the OCN, the Open Credit Enablement Network. Now we know that there is another board meet of the NPCI today. I'm not saying there is going to be a decision on that or whether we'll know the standard operating procedures, but it is expected that it is going to be rolled out very soon. Do you agree there's going to be the UPI moment for lending, and with all that's happening in the ecosystem, that is the way to go, and it's going to happen? It's bound to really shake it up now.
Yeah, I think credit has to come on UPI, right? Like all the transactions are debit transactions, right? So I'm just dipping into my bank account to send out money either to a merchant or to a peer. My feeling was that if WhatsApp would have been let in without a cap, the shake-up would have made the other TPAs move towards credit faster. Right? Let's say, hypothetically, if WhatsApp would have taken 75% of market then it would have been clear to PhonePe and Google Pay that, on debit, it's very hard to beat WhatsApp. So let's start building the real thing, which is going to be credit, right? So I think to that extent, what this has done, at least from a TPA perspective, has pushed back their move towards credit on the consumer side, right? So that's my view. But credit on UPI is the next thing, right? It has to come on the consumer side.
I'll give you the final comments because that is the next jigsaw puzzle, right? They would have had no choice but to get into the lending business. It is apparently being fast-paced. You did see the NPCI chairman talk about it a couple of months ago, and that is now the missing tool, if I could say.
So, Nintha, was it for me? Yeah.
Yes, Deepak, it was for you.
Deepak, yeah.
Yeah, sorry, I missed the question. Can you repeat the question, please?
As I was giving you final comments, because that's right now the missing link, right, to the jigsaw puzzle, which is lending, which Ashneer was pointing out that maybe Google Pay and PhonePe would have had their hands tied and pushed towards that. There is a board meet today of the NPCI. I'm not saying that this is going to be the outcome of that, but it's going to be out sooner than later. And how do you see that panning out, given the caps? Now, will you only have caps for the market share of payments? Will you not have for lending? But that seems a bit unbelievable as well.
No, I think lending is a different product. So I don't see, we'll reach a stage where market caps will start impacting lending as well. They've not just started building those products. It'll take a couple of years to even need a sizable population. I think the bigger issue is that we still need to build a lot of innovative products around UPI. For example, e-mandate was announced almost a year back. It was made available a couple of months back, except 2 or 3 or 4 banks. Most of the banks are still not supporting e-mandate. So I think UPI still has a long way to go when it comes to improving the user experience. So I keep saying that, while WhatsApp will do, might expand the universe on P2P, Google Pay and PhonePe, they have this responsibility to build innovative merchant-led products, innovative consumer-led products. Like Ashneer said, build, credit around UPI, innovate on the mandate side, give seamless integration across online merchants. So I think they have lot more tasks at hand because they need to figure out 2 years down the line, would they like to be seen as a P2P player, which in all fairness, I think WhatsApp will take the cake, or they want to be seen as building financial services or building innovative products on top of UPI.
Okay, with that, Deepak, as well as Ashneer, I'd like to thank you both for joining us on this edition of Startup Central and for being so candid. There's the newsmakers of the day, the WhatsApp Pay going live, and of course the NPCI coming out with the market.